Hi, Jasmine from Redwood here, and this week's frequently asked question is, how do I work out if I have to pay inheritance tax? It's a really good question. There are lots of ways that you can calculate it. There are calculators online, there are lots of information online as well, or you can seek the help of a professional to make sure that you've really understood the makeup of your estate and all of the assets that are held within it, and which assets class as being subject to inheritance tax and which of them are exempt. There are lots of different assets. Some of them have some quirky rules, whether it's things like business property relief or agricultural property relief. And you've also got things like certain types of pensions, which also are exempt from inheritance tax as well. So I will say that what I'm about to do is the calculation in very simplistic terms, but it is important to understand exactly the makeup of your assets and how they are treated for inheritance tax purposes. And for that, I would always recommend that you get professional advice, whether that's from ourselves or another firm that you feel comfortable taking advice from. But in terms of the sort of basic steps of how you can approach calculating your inheritance tax liability, and if you have one, the first thing to do is work out the market value share of all the assets in your estate and add them all up. So that's going to give you your gross estate value. As I said, assuming that all of your assets are currently liable for inheritance tax. After you've added up your total estate value, you then need to deduct any debts. So any mortgages, overdrafts, loans, credit cards, anything that is a debt on your estate needs to come off, and that is then going to give you your net estate value. If you do have any reliefs that you're allowed to claim, such as business property relief or agricultural property relief, and you know that you've got those reliefs, then you will also deduct any values of those reliefs off as well. Once you've done that, you can then deduct the value of any tax-exempt assets. This will include things like tax-free gifts, anything left to your spouse because there's no inheritance tax between husband and wife, as well as any gifts to things like charities who are also exempt from inheritance tax. Then, once you've done all of that, you can then deduct your tax-free allowances from that final value that you've got after doing steps 1 through to 3. And anything over and above those tax-free allowances will then be subject to inheritance tax at 40%. In terms of what the thresholds are, very simplistically, we all have a Nil Rate Band allowance of £325,000. So if you're a single individual, anything in your estate value above £325,000 potentially could be liable to inheritance tax. However, since 2017, we've also had the residential Nil Rate Band allowance. This is a special allowance currently set at £175,000, which means that if you have a main residence and you are leaving that main residence, or you previously had an interest in a residential property, perhaps you've had to sell it to go into a care home, but if you previously had an interest in a residential property, you can use that £175,000 allowance against the value of your home, as long as you are passing that property down to what the government call direct descendants. What does that mean? It means children, grandchildren, great-grandchildren, anyone in that bloodline. That does also include adopted and stepchildren as well. So, as I said, it's a little bit complicated because you do have to understand all the different reliefs and allowances, whether or not any of your assets are currently already exempt from inheritance tax. And you also need to know if you qualify for the residential Nil Rate Band allowance, not just the standard Nil Rate Band allowance that everyone gets. So this is why in recent years it's become a lot more complex, and why I would recommend that you do take professional advice. This is something at Redwood that we can help you with and make sure that you understood all of those allowances, you're claiming all the right reliefs, and then we can give you the full picture on your inheritance tax liability. But if you're confident in the figures and you've worked everything out correctly, essentially everything over that inheritance tax threshold of £500,000 for an individual or £1 million for a couple will then be, anything above that will then be taxed at 40%. I hope that helps answer the question a little bit, but as I say, I know it's a complex area, so please don't hesitate to get in touch and we can calculate your inheritance tax liability for you and let you know then ways in which you can legitimately mitigate it. We've also got lots more information on inheritance tax planning on our free Wills, Trust and Estate Planning webinar. It's about 45 minutes long. Check it out on our website and you can get lots more information about inheritance tax planning, not just the calculations, but also what to do about it as well. I hope that helps answer that question for this week, and I look forward to answering more questions next week.